Okay, on this video, we'll be talking about a strategy on the ranging market. This strategy is only done on the ranging market. So before we go further, I would like you to subscribe to our YouTube channel, like and share our videos so that others can benefit. So immediately after the intro, we'll move straight to the topic. Thank you. So welcome back. Well, a ranging market is a market that is usually an indecisive market where the market just moves sideways without any direction, as in either it's not going up or down, it just keep moving sideways, just like this on my screen. You can see within this box is what I call the ranging market, because if you notice here, you will notice that the market went up, fully went up and down, but here in the ranging market it doesn't move anywhere, it just goes sideways within this box. So what I do is that immediately I notice there's a ranging market, I pull out my rectangle box and draw between the wick of the ranging market, the top ranging market, and the downside of the top, the lowest side of the ranging market, and wait for a breakout. Immediately the market breaks out of either up of the ranging market, I know it's either it breaks up or down. So, and once it breaks, the first direction it took will be where I'll be entering for my market. If it breaks up, which means I'll be entering for a buy market, and if it breaks down, I'll be entering for a sell market. That is just it about a ranging market. Once a market breaks up, it signifies that this market is going up for a buy, and once it breaks down, it signifies that the market is coming down for a sell. Sometimes immediately it breaks up, it will come down for a retest like this, and before it go up finally. Likewise the down, why sometimes it doesn't even come for a retest, it will just break immediately and continue going upwards like this. It will just continue going upward without any retest. Same goes to the downside. So let's check the chart to see if we can see a good example of this, maybe 2 or 3 examples of this ranging market strategy. The strategy is very easy to understand. Okay, you can see here there's a ranging market. If, for example, you don't know how to identify a ranging market, you can add your RSI. The 50 position, the 50 line is where usually the ranging markets. Let me add the RSI for you to see. Okay, this is the RSI. We have the upper side, which is normally the 70, and the downside, which is normally the 30. So, and we have the 50 side, which is normally the middle. So if the market is just within this middle side, like you can see here, it is just within the middle side without going up or down, we call it the ranging market. You can see all through here the market has been ranging. So this can give you a guide if you are not really sure that the market is either ranging or in the normal price. So if the market is ranging, you can use the RSI to identify if a market is in ranging market or not. So just like this, you can see the market is ranging all through here. So what I will do is that I will draw my box and wait for a breakout. Immediately it breaks out, you can enter for a buy because it breaks out up. You can enter for your long position and take your cool cash, and your stop loss will be beneath the other side of the ranging market. That's the down part of the ranging market. Just like this. You can just put your take profit and you can get some high money out of this market. As you can see, so let's check for another example and see in a ranging market. Let's look for another ranging market and see what happened. You can see the market's range. There is some kind of ranging market here, and it broke up here, which went to this up. It's something you can take. It didn't come down. So that is just it about the ranging market. It's a strategy that is very easy. We have seen in this forex trading, we have so many strategies. If you wish to, you can see some ranging part here. This place is a market that range also. From this part, you can notice this place is a ranging market, and immediately it broke out. You see, you can just enter for a long. You can just enter for a long and take out some pips here, and your stop loss will always be here. So mostly it's a scalping market. It's for you to just scalp out some. This strategy is meant for scalpers. Let's look for another market that is ranging. And one thing is that mostly the market ranges, especially when they want to be a maybe change of direction or so. So let's look for another ranging market and see what will happen. Okay, you can see that there is a ranging market here. And usually you see that the ranging market usually happens most of the time in between your 200 EMA. This line here, this yellow line you can see is my 200 EMA. So most of the time it happens between your 200 EMA. But this particular one, the 50 line here on this RSI is more reliable. So I will advise you to always rely on this. Once you notice that a market is just moving sideways in your 50, in your RF, in the middle line of your RSI, which is the 50 level, you will just draw out your box and wait for it to break out. So let's look for another ranging market that's tally with our RSI. Since it's a scalping market, most of the time, maybe your phone might be on your hand. Immediately you enter the market and you notice maybe the thing wants to change a direction, you can just take out your profit and get out of the market. You can see there are several ranges here also, which breaks up. If you notice, it breaks up. If you notice, it breaks up. I'm looking for a perfect ranging market. Okay, you see this place now. There's perfect ranging market here. And again, how to know that a market is ranging is that you will see the candlestick very, very small. They will be very, very small. Unlike the normal long candlestick you see. It will be very tiny and small, meaning it is indecisive. It is indecisive. You understand? So there's no much momentum in the market at that time. No much buyer and no much sellers in the market. So you pull out your rectangle box and draw it in between the sideways. Bring it a bit, yes, like this, and put this like this. So now we are waiting for this market to break out, which happened immediately at this place. So once the market break out, you carry your long position. If it is a buy market, you take out your long position and enter the market for a buy. Mind you, this is just a scalping method. So in most of the time, you know you are not taking more than 100 pips or so in the market. So you see, and your phone will be in your hand. Immediately you see that the market wants to change direction, you just cut out the market and you are good to go. Your stop loss will always be around this area. So this is it about the ranging market strategy. Thank you, and kindly subscribe to our YouTube channel. Share this video. If you are watching us all the time, you have not subscribed, please subscribe to this YouTube channel. Share this video so that YouTube will recommend this video to other new Forex traders so they can learn and become profitable in Forex trading. Thank you and peace out.